Last year I made a video covering the Guggenheim Strategic Opportunities Fund, ticker symbol GOF. This holding is easily one of the most popular investments among those who are seeking current income. I wanted to circle back on this investment because over the last week there's been some huge developments going on with this closed-end fund. As of right now, GOF is currently offering investors a dividend yield that exceeds 18%. So I think it's worth asking, is now a great buying opportunity to pick up shares of this fund, or would investors be better off avoiding it? In this video, I'm going to try and determine that answer, so let's get into it. First off, the Guggenheim Strategic Opportunities Fund is a closed-end fund issued by Guggenheim Partners, which is a large investment company founded by the Guggenheim family. They made a fortune in the mining industry in the early 20th century, and they later created this financial company. According to their website, GOF's investment objective is to maximize total return through a combination of current income and capital appreciation. It says the fund will pursue a relatively value-based investment philosophy which utilizes a quantitative and qualitative analysis to seek and identify securities. The fund seeks to combine a credit-managed fixed income portfolio with access to a diversified pool of alternative investments and equity strategies. There's a lot of really appealing things about this investment on top of just an 18% dividend yield. But it also pays investors monthly dividends, which makes it appealing for those seeking current income, like maybe if you're retired or already living off dividends. But I think what's also really impressive is that in the entirety of this fund's existence, more than 16 years, GOF has never reduced their dividend. Looking at the dividend distribution history for this fund, we can see it started with a monthly dividend of 14.2 cents per share. In December of 2007, they were able to grow their dividend to 15.4 cents per share a month. In December of 2012, they grew it to 16.94 cents per share, and then again 5 months later to 18.21 cents per share. Since this happened, GOF has been paying this exact same dividend amount now for over a decade. But there's been some stuff going on that has a lot of investors concerned about GOF. Completely out of nowhere, in the last 2 weeks, the share price of this fund has plummeted significantly. If we look at the 6-month share price performance of GOF, we can see it wasn't doing too bad for a while. On October 1st, there was a significant price drop of more than 6%. And then between October 13th and October 17th, the share price fell by almost 19% in just 4 days. So a lot of investors and shareholders of GOF have been wondering what's been going on with this holding in just the last couple of weeks. A quick Google search doesn't appear to show any major developing news regarding this fund. If you go to the Guggenheim website, you won't find any negative press releases regarding this fund either. In fact, on the 2nd, they announced their regular monthly dividend with no changes whatsoever. So a lot of people have been wondering why the share price has fallen all of a sudden. One of my first instincts was to look at the share price in relation to its net asset value. I remembered from memory that GOF almost always trades at a significant premium to its NAV simply because of its great track record. Investors have been willing to pay a high premium for the consistent share price and dividend distributions of GOF. This is a unique feature, by the way, of closed-end funds. Unlike ETFs that almost always trade close to their NAVs, CEFs can trade at a massive premium or discount to their NAVs. People often say that it's bad to buy a CEF when it's trading at a huge premium, but that's not necessarily true. If a fund has a long track record of consistency like GOF, then buying it at a premium isn't bad if you think the dividends and the share price are safe. For many years, GOF had traded at a massive premium according to CEF Connect. The 52-week average premium has been about 26.54%, whereas now it's only 3.53%. You can see the chart on the right that the share price, which is in dark blue, recently took a huge dive. But on the other hand, the NAV, which is represented by the lighter blue line, hasn't seen a dramatic drop. According to this fund's website, GOF holds 36.35% of its portfolio in high-yield corporate bonds, 32.97% in bank loans, and 18.4% in asset-backed securities, and so on. So based on the fact that the NAV hasn't changed much in the last month would indicate that what this fund holds is not responsible for its share price falling. No chunk of its holdings appear to have failed or defaulted or anything like that. What's inside of GOF does not appear to be behind the share price decline. In my opinion, there's a couple reasons why GOF might have dropped so much in share price. What I think might be a good theory is that a large institutional holder might have decided to unload a bunch of shares. If you go to some financial websites like NASDAQ, it'll tell you which institutions hold a particular investment and what percentage of all outstanding shares they own. If we do that for GOF, we can see that 16% of all outstanding shares of this fund are owned by institutions. You can see some of the larger holders include Morgan Stanley, UBS, Prime Capital, among many others. They all own shares to do things like put them in their own diversified investments, like if they manage pensions or even their own closed-end funds. Because they own so many shares of this investment, if one of them were to sell a chunk or even all of their shares, it could cause a lot of havoc on GOF's share price. Another possibility, which would be far worse, is that an insider sold a lot of their own shares. Insider owners include the CEO and the board members of a company. They're required by the SEC to report how many shares they own of their own stock and also whenever they buy or sell shares of their own stock or fund. If an insider unloads a bunch of shares, it's not something that you want to see. It's possible that this person or these people might anticipate something going wrong. I've seen some people speculate that an insider might have recently unloaded shares because they anticipate a future dividend cut. And while that's possible, we can't know for certain if that's what happened. Whenever institutions or insiders sell shares of their own stock, they're required to report it to the SEC, but all of this takes place after the transaction occurs. So we might not know for a while if a large shareholder did decide to sell a huge chunk of their shares of GOF. As I highlighted in my old GOF video, I found something in their annual report which was pretty surprising. I was curious about how this fund was able to sustain its dividend over all these years despite the value of this fund's NAV going down. Based on my observation, it looked like they had been able to keep this really high dividend by issuing a lot of new shares of their own fund. If that's true, then that's cause for concern because that would imply that whenever they stop issuing new shares, a dividend cut will have to occur. What doesn't make things any better is the fact that a lot of their dividends have been classified as return of capital. This has been ongoing for a while. This fund has relied a lot on ROC since about 2017. People have pointed out that GOF has been through several price declines in the past and that it's recovered, and while that is true, the declines that GOF went through were all correlated with the overall market. For example, you can see that GOF fell during the financial crisis as well as in 2015, which the overall market also did. But what GOF is currently going through right now doesn't appear to be related to anything else going on in the market. It seems that it's been independent of anything else, which I think is concerning. Again, you can also see that GOF fell during the pandemic, which the overall market obviously did too. So overall, is GOF a good buying opportunity? I feel like it's kind of ominous as to what's been going on. Whenever a stock plunges almost 20%, you can almost always figure out what's been going on. They either reported bad financials or the CEO abruptly resigned or something like that. But in this situation, I can't locate a solid reason as to why GOF has fallen so hard. I really can't blame people for speculating that maybe an insider does know something that the general public doesn't. But the fact that I can't find a good explanation for the decline is making me stand off to the sidelines for the time being. I'm really curious about the next few months to figure out if there will be a dividend cut for GOF. I will go ahead and point out though that even if there is a dramatic dividend cut by let's say 50%, that would still translate into a monthly dividend paying investment yielding over 9%. I would say that would be a good thing to consider if you are curious about being a shareholder of this investment, but if they do announce a dividend cut, it'll probably lead to the share price falling for quite a while. Whether or not GOF will recover from this mysterious and dramatic share price drop will just have to wait to be seen. But with that being said, that's going to conclude today's video. If you're interested, feel free to check out my Patreon where you'll find an Excel sheet of all of my holdings updated monthly. Plus it'll give you access to our Discord channel where we discuss higher yielding types of investments. With that being said, thank you all so much for watching today's video. If you liked what you saw, then feel free to hit that like button below and click subscribe if you want to see higher yielding investing strategy content. Again, thank you all so much for watching today's video, and until next time, take care.